Hello, ladies and gentlemen. My name is Greg Michalowski from ForexLive.com. This is a preview for the week for the pound versus US dollar for the week of October 20th, 2014. I'm going to title it Setting Up for the News this week. And the market is setting up for news. We have three events: the Monetary Policy Committee meeting minutes. Understand that this meeting took place before all the turmoil of last week. So it might be a little bit changed from that, but the market will be paying attention to the nuances from that statement from those meeting minutes. That takes place on Wednesday. On Thursday, we have the retail sales coming out of the UK, minus 0.1 versus plus 0.4 the prior month. And on Friday, we have preliminary GDP for the third quarter. 0.7% is the expectation. 0.9% was the second quarter GDP. So a little bit lower than the second quarter GDP, but still pretty decent growth coming out of the UK. So the market is setting itself up for these events. And when events occur, economic events, economic releases, economic statements, then you have increased risk. So pay attention to that. And a lot of times the market will set itself by setting up technical levels that you can define your risk and limit your risk, or get a bias from. Moves below a level, bias is bearish. Moves above a level, bias is bullish. So let's focus on some of our technicals by taking a look at the daily chart to start off with. And on the daily chart, I'm going to focus here on the 160 level. It looks like the bias is to the downside here in the pound versus US dollar, but this 160 level is a 50% retracement, a move up from the 2013 high to the 2013 low to the 2014 high. The 50% comes in at the 160 level, and we've been below it 5 separate days in the month of October. But we only have two closes below that 160 level, right here and right here. The other closes are above the 160 level. So are there buyers down below the 160 level? Is there a line in the sand at that level? Maybe. We will see. Well, staying above that level will show us this week. If we can stay above that level, that's bullish off the daily chart. So a little bit more bullish bias off of that move last week. Now, last week we did have a volatile week as a result of all the stuff that was going on with Ebola, with the stock markets, and so on and so forth. Interest rates, of course. We closed the prior week, not last week, but the prior week, right around here, and we opened and we closed this week right here. So not much change between weeks, but in between we went to the downside. Lots of volatility, lots of choppy action here. But let's focus on some of the technicals here and see what the market is saying from a technical perspective. And there are certain things here that are of interest to me. One is, remember the 160 level? Well, the 100-hour moving average is right around that 160 level, and it still remains around that 160 level, at around the 160.03 level, and the market moved above that level. And the last thing that we did here after the move higher here was come down, test the 160 level, and move higher. So we had those buyers in this area. The next thing that I want to focus on here is this trend line. And this trend line, we have 1, 2, and on Friday we came down to that trend line after breaking below this area right here. I'll talk about that in a second. Found support against that trend line and remains above that trend line. So the trend line is showing a little bit more bullishness here. We closed the week near the trend line, so that may be a level that we're going to be watching just in the shorter term right there. The third thing I want to focus on here on the hourly chart is this green line, which represents the 200-hour moving average. And the 200-hour moving average was broken on Friday, but only one bar in the market failed on that break because we couldn't get below the trend line, right? And we moved back above it. We stayed above that level. So that's bullish from the hourly chart. And the final thing I want to focus on is 50% retracement of the move down from the prior week high down to the low. That level comes in at 160.49. The 200-hour moving average comes in at 160.54. And we found support against that level, those levels here. And so we're above that. So a little bit more bullish bias here off of the hourly chart. Now, what's bearish here? What's bearish, or what gives you a little bit cause for pause? And up here, right here against the high from the week, which was Monday's high, and then we had Friday's high. So we had the high for the week, not once, not twice, but 3 times the market stalled at that level. So if I were to set the stage for this week from a technical perspective, it comes pretty simple for me, and it's this box right here. Boom, 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 boom. in between the 50% retracement, in between the 160-125 level. And so as a trader, if you don't have if you're long, you're okay. If you're short, you're okay, because it's going to be what happens outside of this box. It's going to determine the winners and the losers, I feel, for the next move, either there or there. So you can be long or short right here, and it doesn't really matter to me, but we're looking for the breaks one way or the other. And if it does break below the 50%, or if it does break above the 161.25 level, you want to look for momentum. You want to look for the next targets. On the top side, the next target for me comes here at the 161.61 level. Nice, easy number to remember. That level corresponds with some lows here, and then we move below it here, and then we use the level as resistance here, and then we had some support here. But the last thing that we did here was fall below that level, never to return again. So that level becomes a level of a target above the 161.25 level. Then we're looking for the top side trend line. We're looking at the highs, obviously, and that's the upside progression. On the downside, if we move back below the 160.49.53 level right here, look for further selling down toward the 160 level. And what can I say? 160 is key level for me. Either we're going to find support there, or we're going to break below that level and move lower here. So in summary, it's about the box here. It's about setting up for the fundamental news here. What is the fundamental news? I don't know, but it's going to help the market decide what it wants to do outside the box. If you like this video, make sure that you click the like button right here. Also, if you want to be on our subscriber list, make sure you subscribe to it, and you can share it on Facebook or Twitter. I won't mind. Good fortune with your trading. My name is Greg Michalowski. Bye-bye now.